Get ready. 10 seconds. 5 seconds. Start. Sir, the present taxes must be lowered from another angle too. The government has professed its concern for the small businessman, the small industrialist, the technocrat, and so on. Unfortunately, the rates of income tax above rupees 40,000 would not allow even the small industrialist to save enough from his current profits to pay interest on his borrowings or repay the loan for the fixed capital investment which he would be forced to take from public financial institutions or the nationalized banks. The taxes have been made so exorbitant above the level of rupees 40,000 that there is no scope for even the small industrialist to repay his debt and to stand on a surer footing at the current level of taxes. Another factor which must be considered is the brain drain which the country is already experiencing in several fields, notably in the technical field, inasmuch as technicians today are electing to go abroad and accept appointments abroad in preference to serving in their own country, particularly because of the high tax rates that prevail in the country. Not only they, but business managers of whom there is a great dearth in the country, the professional managers who are required in more and more numbers to manage the giant concerns would not be attracted to India. Anyone who has received modern training in business management can receive a much higher paid job abroad as compared to what he will get here. A 10% surcharge on income tax was levied purely as a temporary measure. It is unfortunate that the surcharge is still continuing, although there is no emergency and there is no justification for its continuance. The excessive tax burden prevents salaried persons from making provision for their retirement out of current earnings because the post tax earnings are barely enough to meet the day to day expenses, which are also going up as a direct result of the government's policy of imposing more and more excise duties on goods of day to day consumption. Therefore, it is very essential that retirement benefits should be very liberally treated for tax purposes. It would be advisable to increase the limit of rupees 25% of salary or rupees 8,000 which is allowed today for the purpose of provident fund etc., so that at least the salaried persons could save a little out of their current earnings for use in their old age. Sir, I now come to the recent provision in the finance bill regarding wealth tax on urban property. A very novel proposal has been introduced this year regarding wealth tax on urban property in the name of social justice. What I fail to understand is what kind of social justice is involved if a landowner constructs a building and lets it out to dozens of middle class families. Every middle class family in the country today cannot hope to own its own residence, especially in big cities. Another point I would like to make is in regard to plantation buildings. As is well known, there are buildings for use of labor in plantations. If the plantations are owned by limited companies, they do not come within the mischief of this section, but if they are owned by individuals, a very iniquitous position arises because even labor quarters, hospitals, creches, and buildings like that of schools and water installations are all to be valued and subjected to this urban property tax. This is something which I am sure is unintended, and the Honorable Minister should pay attention to the rectification of this anomaly. Another very important but very unjust provision has been brought about in the case of charity trusts. Sir, like all individuals or companies or firms, even charity trusts need to accumulate at least a certain part of their income. It is unfortunate that the provisions of the finance bill required the charity trusts to spend their entire income within a short period of time. Even if a single rupee is saved by the charity trust, it would come within the mischief of the taxing provisions of the finance bill. By another provision, it has been provided that if investment is made by charity trusts in concerns in which the founder of the concern had a substantial interest, the trust would disqualify for tax exemption. I cannot understand the logic. If the causes were not charitable, naturally the trust would not have qualified in the first place. But having conceded that the causes for which the trust was formed were in the public interest, now just because somebody else is going to benefit, the trust is going to be penalized. I do not understand the logic of this. If the trust gives money to any person without adequate security or at inadequate rates of interest, I can understand the provision which says that the trust will be deemed to have done something wrong. But if a trust receives donations, in-kind donations, which consist of shares in the concerns of the founder of the trust, cannot be said to have done anything wrong. It has received donations in kind. It has not invested any funds out of its own pockets in the concern of the founder, but even such an eventuality will penalize the trust for no fault of its own. In the sphere of indirect taxes, there has been a large scale imposition on items of day-to-day consumption like sugar, tea, kerosene, aerated water, biscuits, condensed milk, milk powder, malted milk, and so on and so forth. The Prime Minister said that on annual incomes of rupees 25,000, the assessees would get a tax benefit of rupees 10 a year. As against this, such middle class people with incomes not exceeding rupees 25,000 would have to incur an additional expenditure on their food basket alone of anywhere between rupees 250 to rupees 300 per year.